are seeing some profit taking in the energy sector.
This video is for educational purposes only. Consult a licensed financial advisor before investing.
Hi, Ted Dixon here with an On the Edge update for March 30th. We're looking at the 1 month anniversary of the Iran war, looking at the winners and losers as identified through our morning reports. Not surprisingly, energy stocks have been the big winners. We have highlighted 4 energy stocks in February, and all 4 have done quite well. Now, we are seeing some profit taking in the energy sector in the weeks and months ahead. We will be keeping an eye on that. But at this point, that is not a surprise to see insiders taking money off the table. We're going to keep an eye, though, on the intensity of the profit taking. But at this point, the activity of insiders is reinforcing the momentum we're seeing in the energy sector. Profit taking is to be expected. The question is, how intense does it get from here? So we'll be keeping a close eye on that. Some other winners in February were specialized industrials, those industrials that are more or less independent of the war in the sense that their key markets are not going to be affected directly by the headlines and the direction of the war. For example, public transit, a bus maker I wrote about, is pretty much, I think, isolated, at least, certainly in the medium term, from the direction of the war. Another group of winners are constrained commodity suppliers, such as sulfur. The global supply is being impacted by the dry up of traffic through the Strait of Hormuz. And the Strait of Hormuz is now, I think, the key factor in terms of how it's going to impact markets in the weeks ahead. Initially, when the war started, it was about the nuclear capacity of Iran and also the government of Iran. But now I think the key factor that's going to determine how markets behave is the future of the Strait of Hormuz. So of course we're going to have to keep an eye on that and put in perspective what insiders are doing and what stocks are doing and other asset classes are doing in relation to that. Right now it's fairly unsettled as how that's going to evolve, but we're keeping an eye on that in our regular updates in Inc. chat. And again, that registration is available to Inc. members, Canadian Insider registered members, and Insider Tracking members. So I would encourage you to check on our overview of the war, update it fairly regularly in terms of what we're seeing, and because events are moving so quickly. One of the losers over the past month have been miners and gold miners as well. We've talked about that in the Inc. chat, but we did have this sort of liquidation phase of gold miners where a lot of players had to sell some of their gold to deal with lost revenue. Like we've heard about Turkey having to sell some gold. Have we worked through that yet? We did see some strength at the end of February, so we may be past that phase, and gold may be reasserting itself as is safe haven again. Now, a lot will depend, I think, in terms of the direction of miners on what the Fed does. For over a year, we've been saying the Fed doesn't really matter. It's more about fiscal policy. Well, now we know that fiscal policy is going to have to respond to the war in the sense that in the US, as their armaments need to be replenished and more ammunition is needed, there's going to have to be more spending. But does the Fed support that spending? Does the Fed provide liquidity to the market, or does it fight inflation? And that's going to be key. So we have yet to really hear from the Fed. They're going to have to either make it clear what they're going to do as opposed to what they say. So we're going to keep an eye on some of the credit facilities we see that the Fed uses, such as the standing repo facility, and we'll keep an eye on any metrics that we can off the Fed's balance sheet to see, are they really going to support the war, or are they fighting inflation? If they're fighting inflation, that's going to be very challenging for markets. We've got two key scenarios that in terms of probabilities that we're looking at. One is war economy, which would be when the Fed comes in and supports economic activity in the US. But the other is actually depression, which we think is a significant risk if the Fed raises rates. So this is a really critical war that's going on. This is probably the biggest event since the Vietnam War, and it's going to reshape not only geopolitics over the next decade or generation, but it is going to impact the economy. And we're going to keep an eye on how insiders are responding. So far, we've seen energy, as I said, doing well. Now we're keeping an eye on miners. Are we going to see a rotation into the mining group? And we will certainly be watching what insiders do. I think in terms of where the winners and losers are going to be. Now, unfortunately, I say unfortunately because we're back to this, what is the Fed going to do, as that will impact whether inflation's allowed to run a bit hotter or whether they choke off the economy with tight money, which will not only impact, I think, the miners, but it also could impact energy as well, as we could see a reversal in the fortunes of energy if the Fed joins in the demand destruction game. I mean, higher prices at the pump will lower some energy demand, but if you have the Fed raising rates or even keeping money, tight money here in place, relatively tight compared to what I think you might need to fund a war economy, then we could see a peak in oil prices at some point. We're not there yet, but we're going to keep an eye on it. If you're not a member of Canadian Insider, you can join for free as a Canadian Intro member, and then you can sign up for Ink Chat. We approve each application, registration for Ink Chat, and as long as you're using your email that's associated with your Canadian Insider account or your Ink account, your insider tracking account, we'll have you on board. So until next time, take care in these very choppy markets. Thanks for watching.